Okay guys, welcome to the Market Maker Collection video series. This is the first in a series of 12 videos. We're going to be going over a lot of material in the next 12 videos. There will be a rehash of a lot of the classic ICT material, and there's a further amplification of some of the things that we have just glossed over. I know many of you probably think it's a lot of information, and it is a lot of information that was covered over the last 4 years, since 2010 when I stepped on the scene as a foreign exchange mentor and teacher, or quote-unquote guru. the the material, we're going to be actually going into a lot more principle-oriented and step-by-step approach. This is going to be one of the most broad brush teachings in the series, but it is one of the most important because it ferrets out a lot of the explosive price moves that many traders are caught off guard by. Or if you're looking over your charts over the, like for instance at the time of this recording, we're drawing near the end of 2014, and many of the stellar moves of the year, okay, are perplexing many neophyte traders. And some of the guys that are actually been trading for a while were caught off guard by some of the monster moves that we saw this year. If you've been a part of the ICT camp and some of the live reviews and market commentary and videos that I put either on my YouTube channel at Inner Circle Trader or at my website, obviously the innercircletrader.com, there's been a long history of calling these major moves into the levels they traded to throughout the year, well in advance before they actually started doing it. It's important to understand we had a monster bullish rally in the dollar index in 2014, and we called the low in the dollar as it happened, and I'm going to go over some of the details as to what led to my analysis in that and what I do on a quarterly basis and a annual basis with my broad overview of market analysis. And I call it the macro simply because it gives me the biggest picture as it relates to the financial markets. Not just simply the foreign exchange markets, but also equities and commodities. So let's get into this and start breaking down some of the insights that I would like to share with you now. Okay, the interest rate effect. Now, if you have gone through some of my previous series, such as the Trading Plan Development series, the Scout Sniper Field Trading Guide, and the Precision Trading series, and all of the what every new and or aspiring forex trader still wants to know video series and individual modules, you know that I am a modular thinker. In other words, I like to look at things on a modular scale. Small little bite-sized pieces, okay, will eventually break down and disseminate the information of a larger whole. One of the conundrums that traders come against in their trading is, where is the market going? Okay, and you'll have a class of individuals that will view the market in the form of a fundamental aspect, and then there are pure technical analysts or price-based trading. And I lean more towards the technical aspects of trading simply because in my limited capacity as a human being, I readily admit that I am not astute as it relates to fundamentals. I believe there's so many things to keep up with. You never really get a full grasp on what it specifically is that's going to call the turn in the marketplace. Now, I will admit there are certain market drivers that you can focus on, okay, and when the central banks are you know, exercising monetary policy and changing, okay, the masses, okay, or the sentiment in the marketplace, because that's who's driving price anyway. It's not your dealers, it's not the small middleman banks, it's not your brokers, okay, it's the central banks. Now, analysts and teachers and mentors out there like to muddy the water and call all these little subordinate entities into the fray, but it's the central banks. Okay, it's their casino, it's their house, it's their rules. If they want a currency to go lower, they'll devalue it with several means of doing so. We're going to show you one of the ways that you can gauge without having to refer to interest rate differentials. Okay, now I'm not going to disparage the study or the importance of interest rate differentials, because they do have its place in the marketplace. But I'm going to give you one of the truest forms of understanding how the market works, okay, as a whole. Okay, um, when you rub elbows with folks that are actually on the other side of large funds, okay, or provide the liquidity in the marketplace, it just by default you pick up on a lot of things that the general public just doesn't pay attention to. Um, you don't see a lot of books on these types of concepts that we're going to be talking about in this particular series, and that's why it's unique to me. Okay, I'm quite certain that there's going to be a lot of folks that will watch these videos and invariably create their own little teachings around it and change the names of it, because it's going to be proven very, very effective, and it's going to smack the retail industry in the mouth with a lot of the clarity that it gives. Understand this: what I'm sharing in this video series, it comes with a great deal of adversity in my own life, because the entities that divulge these concepts to me, because not all of them are my babies, if you will. They're not my creations, if you will. Some of them were observations that I've seen in price action and were later confirmed by participants on the institutional level. And then there's certainly other things that we'll talk about, such as the central bank dealers range and later modules in this series. All those types of things were actually given to me. They were not brainchilds of ICT. And where credit is due, I will certainly do so. But certain institutional tools and concepts will absolutely have to be anonymous, simply because of that's just the way it's going to have to be. Not because there's somebody out there that has a course or book that has it. Okay, because if they did, I'd save myself a whole lot of work and just say, hey, look, I like this book or that series or that particular mentor, and go read their material that you could purchase or even get it for free if that was the case. But it's just simply not out there. Okay, I've been ripped off by a lot of folks that claim to have insights with the market maker, quote unquote, concepts, but you're going to really get the nuts and bolts of what they do and how they do it and what's their motivation behind all of it in this series. And again, there's no rehash of anything out there on the internet. It's completely unique to me because it is coming from an institutional aspect. Okay. Now, what is the interest rate effect? Well, it's simply an understanding of the interest rate market, such as we're going to focus on the 30-year treasuries. Now, the 30-year treasury, okay, is a instrument that is tradable in the futures market. Now, we're not going to be talking about commodities so much in depth in this particular video here, but we will relate to them as we go through the entire series as it deems necessary. When we look at the market as a whole, and I'm talking all asset classes, I'm talking equities, currencies, commodities, even agricultural and foods and softs as it relates to commodities, and energy prices like oil, gold and silver as precious metals. All of those particular markets